Hey, Matt, it's good to see you again here on Crux Investors. We were here, myself and Oliver, about 8-9 days ago. It's been about 2 weeks that we announced this fantastic merger of ours, and I'm very, very pleased to be joined here by Wayne Bramwell, the MD and CEO, who will be running our new company, which we own 49.9% of. And just as a quick reminder, what we're forming together is the third largest gold company in Australia, 400 to 450,000 ounces annual production, completely unhedged when we do the merger, with tremendous amount of synergies. There are a tremendous amount of synergies here. We've been marketing the story now for about 12 days together, Wayne on his side, me on this side, and it's been very well received by a tremendous amount of our shareholders. We're very excited about this. And the purpose of this call really was to give some highlights about Wayne. A lot of people have been meeting us and they're asking about Wayne. You know, I did talk a bit about Wayne. Wayne has done an amazing job, and I know he won't say this, but I will say this about him. You know, the last 2 years, what that man has been able to accomplish with his team at Westgold has been amazing. I was at all their assets about 3 years ago. I went, toured every asset, spent a whole week there. And Wayne has overcome a lot of obstacles. He's focused, very focused, laser focused at delivering cash and shareholder first returns. He's the right man to be running this company. I'm excited to be handing over the reins with him, and that he's going to be taking it over. So over to you, Wayne.
Well, actually, Wayne, lovely to meet you. And thanks very much for making time to come and see us. I think that is Paul's right. The question that most people have been asking us is like, who is this guy? What's he done? Where's he from? So if you don't mind, in your own words, can you give us a sense of your track record up until this point?
Thanks, Matt. Great to meet and great to connect with the Crux network. Wayne Bramwell, Managing Director, CEO of Westgold. I started life as a metallurgist. So started in operating mines and worked my way backwards or upwards or downwards, whichever way you think, back into a corporate role. A couple of years back, after a long journey of mine project development around the world, I joined the board of Westgold as a non-executive director. At that point, I was running a family office for a well-known Australian billionaire. I transitioned, maybe like a lot of non-executive directors, you actually start to float across the top of the business and then you get to look inside it. The more you look inside it, the more you start to fall in love with it. So 2 years ago, I took on the role of MD. After a refresh in the board, and since that time, Westgold's gone through a transformation very similar in turnaround to what Karora started in 2019.
Yeah, I mean, it's very similar. You're both turnaround stories, and you both started from, well, I shouldn't speak for you. I mean, Karora started from a very low base, you know, in a negative position, and really went through some tough times. Can you give us a sense of, you know, what you guys went through? Because where I want to get to is understanding the integration story, because you both kind of found efficiencies, you both found margin, you both build up kind of cash positions. You're both looking at sort of very healthy reserves, as well as sort of increased resources after, you know, in a very short period of time. But what was your starting position? What were the problems that you were dealing with and had to overcome?
Well, 2 years ago when I stepped in, Westgold was not in great shape, to be fair. I mean, it had produced, the previous year had produced 270-odd thousand ounces of gold, which had been maximum gold production for the business, but had lost $85 million. So it had a very myopic focus on producing gold at all costs, and that really was an unsustainable model because the cash was going backwards. The new board at the time, when they asked me to take on the MD's role, said, look, the model is unsustainable. It has to change. So the turnaround was really about very quickly getting on top of what our real cost base, because our cost control was not where we wanted it to be, start to look at the assets we were running, which at that stage, the business was really complicated. The criticism of Westgold back then was too many moving parts. And at that stage, when I stepped in, we had 6 underground mines running, a 7th in development, plus open pits operating, all at a time when COVID was still a massive factor for labour availability in Western Australia. So really quickly what we did is got on top of our costs, closed 3 mines which were losing money, redeployed equipment and people back into our 4 larger mines and started to change the narrative with both the market and the staff that the focus was now on safe and profitable ounces, starting to get a profitability focus back into the operating model. And I think that's been the real change. The operating team, which at that stage our staff numbers were, say, 12 to 1,300, that the new model of safe and profitable ounces started to resonate. We started to change the operating culture and the corporate culture. And 2 years on, that culture is quite evident, certainly in our financial performance, where the business has been cash flow positive for 5 quarters now.
Right. Okay. So margin, profitability, operating profit, clearly important to any business. So you weren't sort of driving for scale at that point, which obviously now with this merger suggests that you feel you're back in control. Your balance sheet is strong again. Tell me a little bit about some of the things that you had to cut out, because I'd love stories with margin and growth. So where did you focus initially?
So very much the narrative was not about growth at all. It was about consolidation and simplification. The model we were running internally was simplification would increase productivity, and then that would increase profitability. So what was the first thing we did? We stopped open pit mining, went to which I don't think we were very good at. So we went to the extreme of selling the open pit fleet. We'll go open pit mining again, and Paul's got a really good open pit team, which really looking forward to having those guys involved in the broader business. But sold the open pit fleet, started to concentrate on our larger mines, redeployed people and capital back into these larger mines, which had been running undercapitalised and understaffed for 2 years. Once we started to give the mine operators the equipment and the resources they need, productivity started to come up, and all of a sudden, quite quickly, profitability started to follow.
Right. And so, what the challenges remain? Because you went to a model, I guess, of organic growth through life mine extension, through finding higher grades, being more efficient, making sure that the profitability side of the equation stayed firmly in view. Again, I'm sort of intrigued by that focus. In terms of the team's brief, what can you tell us a little bit more about what the sort of daily or the weekly conversations look like?
We started to drive a newer model of a far more accountability at the mine site. There was a bit of a command and control structure back in the corporate head office, and so I flipped that on its head and said to my team, we can't sit in Perth and think we know what's going on in this business. Get out there regularly and be visible and felt leadership. What we tried to do is put more control back into the hands of the guys and girls who are making the decisions on a day-to-day basis in the mines, and make them own the business more. So again, that level of accountability increased pretty quickly and is still increasing, whereby the mine teams are far more empowered within defined boundaries to basically deliver the mission for the shareholders without the interference of the corporate team in head office. Okay,
so strong production with growth potential, organic growth potential, significant cost reductions, a stronger financial position, and a team that understood what you wanted them to do. If you don't mind, can we move to the sort of integration component? Like, you and Paul obviously talked, and this still seemed to happen relatively quickly, it seems. So there must have been a meeting of minds. You've gone from let's do things efficiently and organically through to, well, actually, you bought all the shares of Karora Resources. You decided that now's the time to move and make this thing bigger. What does that integration program look, or what could the integration program look like, assuming it's all voted through?
Look, we're really excited about this. I mean, and should talk to your point that this has come together pretty quickly. I mean, the Karora team and the Westgold team have known each other for a long time, and that went from early discussions to a point of, hang on, both of our businesses are in pretty good shape now. Both of them are generating free cash. Why don't we do this crazy idea of putting two businesses that are generating free cash together into one big machine that can generate a hell of a lot more cash? I mean, both Karora and Westgold are unhedged, and we shook off our hedge book July last year. So, our business had started to get some operating momentum. We were sitting on the sidelines watching what Paul and Lee and the team were doing at Beta Hunt and getting quite excited and very calm manner. And once we started to talk about this corporately, it just made more and more sense. And what was obvious to me, and because Paul had probably had a longer exposure to Westgold in some sense, was that the teams were just, there was a natural meshing of these teams. Paul's guys are the same guys and girls that I've got. His team wears orange, mine wear yellow. They're all going to wear the same colour soon. But there was just a natural ease about these two teams working together and that was evident from the site visits that we've done.
Right. So you think that the ethos is similar in the sense that you've both been through this kind of transformational process, but Karora from pretty much end of 2019, you guys in the last couple of years, both of you in difficult environment in Western Australia with not just COVID, but fires, floods, etc., and lack of access to qualified staff. It kind of feels like that was the kind of easy, quick wins for you. With this integration, you're going to have to find more efficiencies. Have you got a sort of sense of where that comes from? Because I think the institutional shareholder base is going to want to see at least that from you and get some sense of where the growth is going to come from and so how quickly in terms of this free cash flow component, right?
Let me just preface that question with about how the integration works. I mean, our plan with the integration is the Karora machine is not broken. It's actually a very efficient business. What we just have to work out quickly is where can we backfill some either people, equipment or resources to make the Karora assets run harder or more productive. I mean, we love the look. Beta Hunt looks fantastic. And again, what we can bring to the table from the go-get is Westgold is its own owner miner. So we've currently got 140 pieces of underground equipment, including drill rigs. So we drill, we mine, we do everything underground. Paul's team currently mines, but there's parts of the business which he's exposed to in third-party contractors. Removing those contractors and driving the cost out, replacing them with the expanded Westgold resources is going to be a quick win. And the most exciting thing we're looking at is currently we've got 13 underground drill rigs. We've just bought another 6. These 6 that we've just recently bought, we'll take receipt of this month. And we want to give at least 3 to Steve Devlin and the team at Beta Hunt to basically start beating the hell out of that Fletcher loan.
Well, there's a lot of opportunity ahead of you guys, and obviously working out where the drill goes and what you're chasing is going to be exciting to hear from you. Coming back to the institutional boys and girls, though, you're now ASX listed, TSX listed. You'll be talking to 2 sets of institutional shareholders. How are you going to manage all of that? And what's the messaging to the North American market?
And it's a really good point. Like, there's a lot of Paul's shareholders who don't know Westgold, don't know my team, and there's a lot of our shareholders that don't know Karora and don't know Paul's team. Even though Karora's assets are in Australia, they're sort of in some sense, because they're being TSX listed, have been quite invisible to the Australian institutional and retail market. So, I mean, we're already starting to cross-pollinate, and we've been marketing for over a week now, trying to, if you like, the introduction of Westgold to Karora shareholders and the introduction of Karora to Westgold shareholders. So, look, I think it's going to be really exciting because it's a really easy story to tell. Put two businesses that have gone through a similar corporate turnaround together, both of them at a really strong part of their journey, and just build a bigger Aussie or dual-listed company, which with a pathway to well above the 400,000 ounces that we start with as a pro forma.
Yeah, which changes your profile somewhat, and I'm sort of wondering about this. Yeah, you've got dual exchange listing, but in terms of the institutional exposure, you start at this size to become a formative mid-tier. It starts to become attractive to different types of indices and fund managers. So again, are you going to maybe get a few things over the line first before you start marketing heavily into the North American market? Look,
we were already starting to see that between what's happening at Beta Hunt and the Karora assets and what we're doing, there's this really strong news flow post-merger here. I mean, we've got a strong news flow irrespective, but we just can supercharge that news flow by adding some other equipment and pieces to Beta Hunt. I mean, the Higginsville regional opportunities here really excite me. I mean, what Paul and I are really looking forward to is having our 2 geological teams arguing over who's going to get the capital to drill first the good thing is we've actually got the equipment, we've actually got the funds, but the best asset will surface to, in terms of getting that capital. And, Westgold's been doing some stuff with Bluebird, South Junction. That's becoming a much bigger mine. You add the beast, as Paul calls it, Beta Hunt, to the mix of Big Bell, Bluebird, South Junction, Starlight, and our new high-grade Great Fingal mine. And this is an asset package which is got some capability to deliver profitable ounces over a really long time.
Right. And what's your message to the kind of shareholder base, whether it be institutional or retail? Because I think you've been through sort of a kind of rapid, and obviously kind of rapid recovery and growth in a short period of time with a different set of challenges, but, working towards a, similar sort of outcome. You're now going to go through a period of kind of integration, which, as you say, there's also opportunities, but also challenges. It'll be a different sort of time frame that you're working to. So, can you kind of set out the things which are, set in stone? We must hit our ounces quarter over quarter, whatever we do. The rest of it will integrate, in a suitable time frame, so as we kind of get the best out of people and get set ourselves up for the success in the future. So what?
Let me just go back to one point you made there. In some sense, we're not driven by ounces. In the Westgold journey, that was nearly destroyed the business. What we're driven by is free cash. So the absolute model is this expanded business must continue to generate free cash every quarter consistently. That allows us to pay dividends on a consistent basis, reinvest money into the business where we need it. So really the focus is free cash first. The ounces are not, I wouldn't say secondary, but that's our key driver. In terms of the integration, how do we see this working? Once we finally get married, and hopefully Paul and I are walking down the aisle sometime in July, figuratively speaking, Paul. I mean, I know you're married, so am I. So, it'll be a weird...
No.
It's 2020. It's 2024. People can't judge, right? So once we finally get this party started, we can see what we will do for 3 months. What we want to do is we will probably send 1 or 2 people to the Karora assets to watch, listen, and learn. We're not there to come down and tip the place upside down because the business is running really well. All we want to do is work with the Karora people or the site teams to go, okay, what do you guys need and girls need to go faster, harder, or advance these targets? So I suspect what you'll see in the first 3 months, there'll be a lot of integration in the back office in terms of the things the market doesn't see. There's commercial systems that we've got which can absolutely help the Karora team. You probably won't start to see the real market visible integration till probably the second or the third quarter. That's when you'll start to see momentum building at Beta Hunt. But certainly it'll be... The teams will get put together very quickly. I think the teams are really... I can't control the excitement in my team. I'm going to have to put a gate up in the Murchison to hold them up there because they all want to go to Beta Hunt and Higginsville. But, yeah, Matt, that's the sort of the model. 3 months, listen. By 6 months, there's probably going to be more of the market will start to see the real benefits of the merger.
Okay, so focus on money, focus on margin, focus... and the potential of I know you started on giving money back to shareholders, which is always nice. But you won't kind of sort of set yourself some targets earlier on with which you hang yourself. You're going to say, let's work this out and we'll let you know when we've worked it out. Good.
Spot on. And because in the past, in the last 2 years, the market messaging with Westgold was really about being under-promising and over-delivering. And I think in the bigger machine, the same model should work. Let's not, as you say, set an aspirational target which is going to disappoint the market. Even in the way the merger model's been put together, quite conservative, that's, I think, a far better opportunity or a model for the shareholders and the management alike. Under-promise, over-deliver, start to build the profile and the trust post-merger.
Okay. Well, look, I think we've got a sense of the man. And Wayne, I appreciate making time for us today. And Paul, thanks for setting it up. We'll stay in touch as this moves along. Just remind me again, Paul, expected timeline for your shareholders and maybe Wayne, your expected time frame for you?
Vote is looking middle of July, and we were getting a lot of support. And look, just before we tap off here, look, Wayne was very modest. Just summarize what he said. He was very modest here. Listen to his story. What an amazing journey. Only in this for 2 years. I was, when I met him, and you said this was really quick. It wasn't really quick. We've been meeting quarter after quarter. We've been talking about this for a very long time, as he pointed out. So this has been something we've been talking about for a long time, but I just want to tell you how I met him, Matt. He stood up at a podium in the first show I was at, and he stood up there and he said, "We make no apologies for shutting down mines that are uneconomic." What he did next was even more powerful, I thought. I remember being in the audience and hearing this new guy stand up and say that. I said, I've never heard a gold CEO say that first. And then what he did next was he took 3 of his operations that were marginal and he put them on pause. And he said, look, they're not making money. And then what he did was he said, now I'm going to make more money. So he reduced his guidance, he reduced the ounces, but made more money. And I thought, this guy is freaking brilliant. What a better man. This is the best person to run our company. That's the kind of person we want. Don't worry so much about making the ounces every time. Worry about making money. We need to make money quarter after quarter after quarter. So many of us get hung up on this guidance and then we miss the ball. We go, oh, I made guidance, but I lost $10 million. You're like, oh man, Jesus, what a shame. So his style, his entrepreneurship, the way he's focused on making money and then driving that back to the shareholders with a dividend, amazing. So from our shareholders' perspective, this is very well received. We welcome him, the team into this. It's going to be a great company. The re-rate will be powerful. You watch what happens with this re-rate, Matt. You watch. Look at our share prices. People are starting to understand the story. We've both been marketing. They're starting to pay attention, and both of our share prices are reacting well. Watch what happens with the re-rate when the ASX 200 comes in, when the GDX comes in, all those ETFs comes in. People will see, wow, this is one heck of a great story. This is a great company led by a great man. So very excited.
You always are, Paul. And so am I this time. So I will I'll leave you gentlemen to get on with it. I expect an invite to the wedding and stay in touch. We'll see you soon, okay?
Bring flowers.